A good late afternoon or perhaps early evening to you, and thanks for joining us. This is Sage and you're watching 𝐊𝐿𝐴 TV live from Sydney. And this is the last show of the day, the last trade. And there's no better way to wind down the day than with today's market close commentary. So let's dive straight in. The Australian shares closed flat with marginal losses on Monday, led by a sell-off in the energy and realty stocks. The equity market was mostly higher during the day despite a rise in COVID-19 cases, as investors seemed to set aside their virus jitters for now and shifted focus to corporate earnings beginning this week. The state of New South Wales has recorded 145 new locally acquired COVID-19 cases in the last 24 hours, while 11 infections were registered in Victoria. Overall, there are 2,117 active cases in Australia, according to the Federal Health Department. The S&P ASX 200 ended lower by just 10 basis points. Earlier today, the benchmark index opened higher, following a strong finish at Wall Street on Friday, and gained as much as 0.3% to hit an all-time high. The Australian companies are expected to deliver solid earnings growth in June quarter, but the pandemic-led curbs may impact the profitability and guidance. Australian homewares and furniture retailer Temple & Webster, Anglo-Australian miner Rio Tinto Group, and real estate player Uni Bale Rodemco Westfield and the asset management firm Janus Henderson are slated, to release their earnings this week. And on this note, let's focus on top gainers and losers of the day among the individual stocks. Rare earths mining company Lynas Rare Earths, formerly Lynas Corporation, was the top percentage gainer on the ASX, rising 10.5%. On the flip side, gold miner Silver Lake Resources was the top loser on the ASX, falling nearly 7.75%. And let's now take a look at how the sectoral indices performed today. The market breadth indicating the market's overall strength was weak, with 8 of the 11 sectoral indices ending in the red zone. The energy was the worst performer with over 1% loss. Among others, AREIT, information technology, utilities, consumer staples, healthcare and telecom were notable losers, and meanwhile the materials sector emerged as the best performer, settling with over 1% gains. Consumer discretionary and financial stocks also ended marginally higher. In the mining sector, index heavyweights BHP Group ended higher, followed by Rio Tinto and Fortescue Metals. In the yellow metal space, Silver Lake Resources declined the most, in line with All Ordinaries Gold Index, AXGD, which tumbled following the fall in the gold price. And the gold price has slipped on Monday following a 0.5% drop last week, as easing fears in parts of the world over the Delta variant of COVID-19 dented the bullion's appeal as a safe haven asset. And some of the other gold mining stocks that ended in the red included Northern Star Resources, St Barbara, West Gold Resources, Ramelius Resources and Evolution Mining. Let's move on now to the energy space. The sectoral leader Woodside Petroleum, Beach Energy, Santos all closed lower, owing to a fall in crude oil prices. The crude prices dropped due to subdued fuel demand amid the spread of COVID-19 and floods in China. In the banking sector, barring Commonwealth Bank of Australia, all the 3 Australian big lenders, Australia New Zealand Banking Group, Westpac Banking Corporation and National Australia Bank, ended in the red zone. And now, before we look at the shares that are in the news today, it's time for a short break.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
where the property market is headed next,
what the world is doing to become more environmentally friendly,
apart from tracking the daily market charter.
Be on top of the latest news and announcements
with 𝐊𝐿𝐴 TV.
Welcome back, viewers. Thanks for joining us, and hopefully you've enjoyed your day so far. This is Sage. You're watching 𝐊𝐿𝐴 TV live from Sydney, and this is the last show of the day, the last trade. In this segment, we'll shift our focus towards the stocks that created a buzz today. And shares of apparel and footwear retailer Beston Less Group Holdings made a strong debut on the ASX. In line with the broader market, the retail stock gained 6.5% in the opening trade to $2.30 against listing price of $2.16. The company had received received a strong response for its $60 million IPO from institutional and retail investors. The IPO follows a $40 million equity investment from BB Retail Capital, a private investment firm founded and chaired by the retail entrepreneur Brett Blundy, who's set to join the BLG board as BBRC's nominee. And moving forward, BHP shares rose 1.8% to hit the fresh high of $52.19 Australian after the world's second largest miner executed an agreement with the Canadian company West Shore Terminals Investment. And meanwhile, West Shore Terminals has struck a 30-year deal with BHP Canada, a subsidiary of the BHP Group, to provide port services to its proposed Jansen potash mine in Saskatchewan in Canada. As per the deal, West Shore is set to construct the infrastructure required to handle potash at its Roberts Bank terminal by 2026, with BHP funding the project. And next up, rare earth miner Lynas Rare Earths jumped nearly 10% to $7.06 on record June quarter revenue. The company has reported a record quarterly revenue as robust demand led to a jump in sales, as well as offset softness in prices of high purity magnetic rare earth alloys, neodymium and praseodymium. CEO Amanda Lacaze attributed the softer prices during the quarter to a normal correction and said prices had strengthened again in July. And the next stock, dairy products manufacturer A2 Milk, saw its shares declining over 6% to hit an intraday low of $6.36. The market of the fresh milk and infant formula has appointed Amanda Hart as the baby formula's Chief People and Culture Officer. Hart will join A2 Milk from her most recent role as Head of Human Resources, Australia and New Zealand with Dyson Appliances. She will commence on the 6th September and will report to the Managing Director and CEO, David Bortolussi. And let's move on now. Shares of Can Group tumbled as much as 16%, down to 32.5 cents after the company unveiled a plan to raise funds, and the medicinal cannabis group has proposed to raise $20 million through institutional placement and a share purchase plan. Subject to shareholder approval, the fund raised involves an institutional placement at 27.5 cents per share at a 27.6% discount to Friday's closing price. And the firm will also raise $10 million from retail shareholders via a share purchase plan at the same time as the placement price. And the funding will be used to invest in the commissioning of its new manufacturing facility near Mildura. A part of the fund will also be used to expedite and strengthen Can's in-house extraction laboratory and manufacturing capabilities. Shares of Oncosil Medical dropped 1.7% to 5.9 cents after it reported lower than expected earnings. Its earnings were impacted by a disruption caused by COVID-19, and Oncosil is a medical device company that is currently commercialising its platform technology for the treatment of patients with locally advanced pancreatic cancer and bile duct cancer, or distal cholangiocarcinoma. And now, before we look at more shares that are in the news today, it's time for a short break.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Welcome back, Sage here. You're watching 𝐊𝐿𝐴 TV live from Sydney, and this is the last show of the day, the last trade. Let's take a look now at the next update. Infrastructure company GPT Group saw its shares falling as much as 3.3% to $4.59 Australian after it withdrew its guidance for 2021. The real estate investment trust has withdrawn its funds from operation and distribution guidance, citing the uncertainty related to the duration and impacts of lockdowns in both Sydney and Melbourne. And the next stock is software services provider 𝐊𝐚𝐥𝐸XHS gained 4% to reach $1.60 Australian after it announced acquisition of a radiology firm. And the company says it has entered an agreement to acquire Colombia-based radiology services provider RIMAB SAS for 8.5 million Australian dollars. It added that the acquisition is expected to see a gradual earnings growth and that the acquisition will allow it to provide radiology services using its software in Colombia, Latin America, Spain and the United States. Casino operator Crown Resorts is the next company on the list, who slipped 2.7% to $9.75 Australian, extending its fall to an 8th consecutive session. And the company informed the exchange that Western Australia has extended the time given to a Royal Commission probing operations at its Perth casino until March 2022. This extension came after the state of Victoria in June said it would give additional time and funding to a separate Royal Commission probing Crown's operations in the state. Shares of turbine engine services provider PTB Group rallied over 6% to 76.5 cents on upgrading its forecast, and the company has raised the lower end of its EBITDA, excluding foreign exchange gains and losses forecast, which now ranges from 22.5 million to 23 million Australian dollars compared to its previous outlook of 21 to 23 million Australian dollars. It has also upgraded its annual net profit before tax to a range of 16.5 million to 17 million Australian dollars. And lastly, the share price of industrial minerals rose 8% to 31.5 cents on acquisition of Stockyard Silica Sands project. And Stockyard is considered prospective for the high purity silica sand. It's located largely within areas of cleared farming land in Western Australia and has potential for rapid project development. And now, before we look at the global market performance, it's time for a short break. Welcome back, Sage here. You're watching 𝐊𝐴 TV live from Sydney, and this is the last show of the day, the last trade. Now let's take a quick look at the Asian market performance. The Asian markets were trading mostly lower, barring Japan's Nikkei, as investors turned cautious ahead of the US Federal Reserve meeting. While no policy changes are expected in Wednesday's meeting, investors will keep an eye on the tapering discussions that began in June. And Japan's Nikkei, which opened after a long gap of 1 week, is trading higher by over 1%. Hong Kong's Hang Seng was the worst performer in the region, falling nearly 3% amid the sharp selling in tech and education stocks, and shares of Hong Kong-listed Chinese tech and education firms were among the top losers. According to its report, the Chinese authorities stepped up restrictions on the sector. And in a similar trend, China's Shanghai Composite was also down over 2%. The country's antitrust regulator has asked multinational technology conglomerate Tencent to give up its exclusive music licensing rights and fined it for anti-competitive behaviour. And on Friday, the US stock closed at a record high on upbeat corporate earnings, as well as increased investors' appetite for riskier assets amid the signs of an economic revival. The Dow Jones rose 0.68%, the S&P 500 added 1.01%, and the tech-savvy Nasdaq Composite ended 1.04% higher. And that's all for now in the last trade. With our existing operations in Australia, New Zealand, UK and Canada, 𝐊𝐴 Media has launched its operations in the US markets, and every day in our first show, the Global Market Roundup, you can get the latest and important news of the US, Europe and Asia Pacific markets. So on that note, I'll see you tomorrow at 10 a.m. live from Sydney. This is Sage signing off.